This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you in part by
TheStreet.com. Up-to-the-minute stock market news and in-depth analysis. Our quant rating service provides objective, independent ratings daily on over 4,300 stocks. Learn more at TheStreet.com/NBR.
Flying high, investors start the week in a buying mood. The Dow notching its 48th record close this year. Will the momentum continue? We have some big investing ideas for 2014.
The economy. Apple strikes a deal with the world's largest wireless carrier, China Mobile, opening up a massive new market for iPhones. What this could mean for Apple shares, which you may own or you may own in your mutual fund.
And making a difference in 2013. From Apple to Dell, veteran investor Carl Icahn spent much of the year shaking up companies, and it paid off. His story is the first in our series of people having a powerful impact in the business world this year. We have all that and more tonight on Nightly Business Report for Monday, December 23rd.
Good evening, everyone, and welcome. It's hard to say who's having a better year, Peyton Manning or the Dow Jones Industrials. The Denver quarterback yesterday set an NFL record by throwing his 51st touchdown pass of the season. Today, the Dow set its 48th record closing high of the year with 5 trading sessions left. Manning's only got 1 game to go. And the Dow wasn't the only record setter today. The S&P 500, the Dow Transports, and the Russell 2000 also closed at all-time highs. For its part, NASDAQ finished at its loftiest level since September of 2000. Helping push stocks higher today, a rise in consumer spending in November, a lift in consumer confidence in December, and a rosier outlook on the U.S. economy next year from the International Monetary Fund. Today, the blue-chip Dow stocks jumped another 73 points. The NASDAQ was up 44, a more than 1% spike, and the S&P 500 added 9.
Our market guest says there are risks for investors in the new year in 2014, but he's still bullish for the new year. Russ Kosterich is Global Chief Investment Strategist at BlackRock. And Russ, nice to have you back on the program. I don't know about you, and when someone says I have good news and bad news for you, I want to hear the bad news first. So let's start with the risks. What is the biggest risk, and should investors get ready for a correction?
Well, I think there are a couple of risks for next year. I mean, first of all, let me reiterate, I think stocks can and probably will go higher in 2014, but there are a couple of things to watch, the first of which are interest rates. The last few months, the market has reacted very well to the tapering, to the fact that we finally have begun the tapering, and that's likely to continue as long as the backup in rates is measured. So that's the first thing to watch. The second is the strength of the recovery. We expect that the U.S. will grow faster in 2014. But there is one soft spot which I would watch, which are earnings. Actually earnings for individuals, wages, rather than for companies. And the key here is that while the jobs market is getting better, we're seeing improvement in the labor market, the improvement is not so strong as to generate a lot of wage growth. And that is one thing that worries me for 2014. Can consumers continue to spend if their pay packets aren't growing that fast?
Very quickly, why aren't we seeing any wage growth in this country, Russ? It's been a long, long time.
This is a great question, and the truth is it's difficult to answer. I think the first reason, the obvious one, is we're coming out of this recession very slowly. Job growth is accelerating, but it's still not, going gangbusters, so that is suppressing wages. We still have a lot of unemployed people. But it's worth pointing out, as you suggest, that this phenomenon has been happening for a very long time. And some of the factors, whether they be technology or the global wage arbitrage, which are both keeping wages down a bit, these both predate the recession. So even as the economy gets better, it's reasonable to assume that wage growth may not accelerate as fast as it has for most of the post-World War II period.
Russ, I was reading your report, and you said stick with stocks, and then you said for now. So I'm just wondering, what does that mean for investors?
It means that you should go into 2014 still overweight stocks. We still think that equities look better than cash, look better than bonds, where we're keeping our overweight recommendation. The caveat is this: if we see gains in 2014 being driven by a stronger economy, by stronger earnings, that's a good thing, and we'd stay long equities. Where we get nervous is if we're having this conversation a year from now, the Dow was up another 15, 20%, but those gains came from multiple expansion. in other words, some investors willing to pay more for a dollar of earnings, that would be dangerous. So I think if the gains are driven by earnings growth, then we're going to continue to stay long equities.
You know, is next year the year that international stocks catch up with some of the gains here in the U.S.?
Well, we think they do. And, to be honest, there's some international markets that did quite well this year. Japan is one of them. If you own Japanese equities and you hedged out the yen exposure, you're up about 50%. And we think Japan can go further in 2014. Europe's looking a bit better. So I do think that investors, many of whom are very overweight the United States and who've done well with that trade, should think about trimming back a bit in the U.S. and increasing that allocation to international funds.
All right, lots of good information. Thanks so much, Russ. Hope you have a happy holiday.
Thank you.
Russ Kosterich, he's Global Chief Investment Strategist at BlackRock.
A top official at the Federal Reserve is calling for an increase in the central bank's key lending rate, but not right away. Federal Reserve Bank President of Richmond, Jeffrey Lacker, says the bank was right in deciding to taper back on its bond buying stimulus, and he also thinks its record low federal funds rate should start to rise in little more than a year.
In my submission, I put early 2015 for when I think the funds rate will lift off. But that's something that could change a lot one way or another.
Lacker also said he was surprised the market rallied last week after the Fed made its taper announcement.
Another delay at the healthcare.gov marketplace. Expecting a big rush of last-minute filers, the Obama administration has extended today's deadline to sign up for a new health insurance plan by one more day, to tomorrow. This gives shoppers more time to sign up for a plan and make sure they're covered by January 1st.
And yet another delay to tell you about. The incoming head of the Federal Housing Finance Agency plans to delay a scheduled increase in fees on government-backed mortgage loans from Fannie Mae and Freddie Mac. The original idea behind the higher fees was to reduce the number of loans guaranteed by the taxpayer-owned mortgage giants.
The NASDAQ got a big boost today, and that's thanks to Apple. The stock soared nearly 4% after the iPhone maker secured a long-sought-after deal with the world's largest wireless carrier, opening the door for millions more sales. Josh Lipton has more.
Fantastic. Good to see you. Fantastic.
Apple's CEO Tim Cook says he couldn't think of a better way to welcome in the Chinese New Year than getting an iPhone into the hands of every China Mobile customer who wants one. Apple will offer the iPhone on China Mobile's network starting on January 17th as the company tries to boost its share in the world's biggest country. Right now, Apple is losing out to rivals like Samsung and other competitors. In the third quarter, Apple controlled 6% of the Chinese smartphone market, as according to research firm Canalys. But now that could all change thanks to this new partnership. China Mobile offers a huge opportunity for Apple. The company serves over 760 million customers. It's more than double the entire population of the United States. No specific details yet about what the iPhone will cost with a China Mobile contract, but if Apple prices phones in the mid-end range, say $300, then it could take customers from competitors. Much of that would depend, of course, on whether Apple is willing to sacrifice margin for market share. Colin Gillis of BGC doesn't think that will be Apple's strategy.
Apple's showing that they're positioned at the high end of the marketplace, that they're not involved in that race to the bottom, that they want to sell premium product at good prices, maintain their margins.
Still, even without the price point, analysts are already busy estimating what the deal means for Apple's sales. The team at RBC expects this partnership to translate into sales of 17 million iPhones over the next 12 months, which could add $10 billion to Apple's annual revenue line. That would be a big boost for Apple investors who have seen shares surge nearly 50% since April. Josh Lipton, Nightly Business Report, Silicon Valley.
Still ahead, are shoppers turning their backs on Target following the massive credit and debit card security breach?
Good news for drivers. After 4 weeks of steadily climbing higher, prices at the pump fell 2 cents a gallon over the past 2 weeks. The Lundberg survey has a gallon of regular averaging now $3.26 nationwide.
Here's something to tweet about. Jack Dorsey, the chairman of Twitter and the CEO of the mobile payment service Square, has just joined the board of directors at Disney. Dorsey, the person who sent out the very first tweet ever, sent out another one today, quoting company founder Walt Disney, which says, "I only hope we don't lose sight of one thing, that it was all started by a mouse." Of course, that mouse would be Mickey. Dorsey replaces Judith Estrin, a Disney board member for the past 15 years, who, because of term limits, can no longer run for a seat.
Shares of Target fell about 1% today. It's still reeling from the massive security breach to as many as 40 million debit and credit card customers and a decline in sales over the busiest shopping weekend of the year. Julia Borston has more.
The big question this holiday season is just how much Target will suffer from its security breach of millions of shoppers starting the big Thanksgiving weekend. With reports that Target shoppers' credit and debit cards have been flooding underground black markets, going for between $20 and $100 per card, according to the Krebson security blog. The shoppers we caught up with are cautious and wary of using credit cards, but many are still spending.
After everything that happened with the credit card thing, it's going to be cash in Target from now on.
I use cash, but I heard about what happened, so I just kind of stay away from the credit card stuff.
I'm good with it. Okay. It's not going to stop me from going there.
There are no official sales numbers in yet, but retail consultancy Customer Growth Partners says Target's transactions this past weekend were down 3 to 4% from the same weekend last year. And Target's brand perception has dropped more dramatically than other companies that have struggled with data breaches, according to YouGov Brand Index's Buzz Score. Analyst Dana Telsey says rival Walmart will benefit while Target works to lure customers back in.
Typically, when we've seen events like this happen, the retailers need to go out and re-recruit their customer. Re-recruit their customer, whether it's with special deals, whether it's special incentives, whether it's bringing them back in the store in order to regain the trust.
Meanwhile, Chase and other banks have been working to curb fraud from the security breach by setting spending limits for cardholders. Chase just raising its limits on cards affected by the breach. Customers can now withdraw $250 in cash and spend up to $1,000. We'll see if they're too scared to spend any of that money at Target. For Nightly Business Report, I'm Julia Borston in Woodland Hills, California.
Another activist investor is putting pressure on Darden to break up its restaurants, and that's where we begin tonight's Market Focus. Just last week, we told you that Darden is planning to spin off or sell its Red Lobster chain amid pressure from investor Barrington Capital. Well, now Starboard Value is turning up the heat on the restaurant operator, saying that a more dramatic breakup is needed. Shares popped on that news, up more than 6% today to $54.35. The suit saga continues. Joseph A. Bank rejected Men's Wearhouse's takeover bid. Bank originally tried to take over its larger rival, Men's Wearhouse, but the offer was rejected. Now Banks is turning down the turnaround offer because it feels the $1.5 billion bid is just too doggone low. Both of the apparel makers ended the day lower. Joseph A. Bank down more than 1% at $56.29, while Men's Wearhouse shares were off slightly to $51.63. Tiffany & Company has been ordered to pay Swatch almost $450 million in damages. A court ruled that Tiffany terminated a joint watch venture with Swatch before its expiration. As a result, Tiffany had to slash its outlook for the year, and that sent shares of the jeweler down slightly. They finished today at $90.50. Seagate Technologies is buying a data storage company called Xyratex for about $374 million. The move is an effort by Seagate to expand its storage business and improve its supply chain. The deal sent shares of Seagate up a fraction to $56.01, Xyratex at $13.28, up $2.83.
Federal regulators are now allowing Ariad Pharmaceuticals to resume marketing its leukemia drug, but to a smaller population of patients. The drug maker suspended sales of the treatment 2 months ago after data showed more than 25% of patients suffered serious complications. Shares rose sharply today, up almost 9% to $7. A different diagnosis for another drug maker. Tesaro stock plunged today on news of weak test results from a nausea drug. The treatment is used to help patients suffering from nausea after chemotherapy, but this drug did little to help them recover. The stock fell almost 25% to $28.37. And a completely different story for United Therapeutics. The company received approval from the Food and Drug Administration to market its new hypertension treatment. That sent shares soaring up over 30% to $114.51.
Here's something that may not be on your Christmas wish list just yet, but it's showing up on a lot more of them this year. 3D printers for the home or office. Seema Modi takes a look at just how popular and mainstream these amazing devices have become.
Will 3D printers be a hot gift this year? MakerBot's president, Jenny Lawton, thinks they could be.
We're seeing people come in who have never even heard of 3D printing and walking out with a 3D printer.
Stratasys, the 3D printing company that acquired MakerBot earlier this year, opening 2 stores in Boston and Greenwich ahead of the holidays. The goal? Attracting a new type of customer, the retail consumer. The personal 3D printing market is still small, only about 36,000 units sold in 2012, accounting for just 6% of total sales for the 3D printing industry. Analysts say bringing in those consumers is crucial.
Well, they have to innovate, and they have to keep innovating with new products that appeal to consumers. But go-to-market strategy is really important because this is a new market.
So what kind of objects are consumers printing? MakerBot has over 100,000 designs available on its online database, including prosthetic arms, plastic gnomes, not to mention the countless items you can scan, upload, and print.
We have a 12-year-old son who's very interested in engineering, so we thought that this would be a perfect introduction for him to come and kind of try to build something that he has dreamt up.
And it's not just Stratasys that is getting in on the action, with more than 24 consumer models this year. Big retailers like Amazon, Walmart, and Staples are all selling 3D printers geared for the consumer, with prices starting as low as $300. Stratasys and 3D Systems, the 2 biggest names in the space, have been red-hot stocks for investors this year. And if the industry is able to capture a mainstream audience, the growth these companies are seeing could go even higher. For Nightly Business Report, I'm Seema Modi, Greenwich, Connecticut.
Coming up, looking for stocks that could be solid performers in 2014? Well, our special market monitor guest has a list of stocking stuffers. But first, here's what Mario Gabelli, chairman of GAMCO Investors, said he'll be watching in the new year.
For those of you that are watching NBR, I would think the following for 2014. First, earnings are going to be good. Secondly, interest rates are going to go up. The question is not if, but when. And within that framework, how is the market going to react to that? More volatility, but more opportunity to make money.
Wondering what stocks to buy in the new year, so grab some paper and a pencil, maybe your iPad. Every night this week, we're going to feature a special market monitor to talk about stock picks for 2014. We now begin with Charlie Bobrinskoy. He's vice chairman of Ariel Investments and portfolio manager of the Ariel Focus Funds, up 36% this year. Nice work, Charlie. Congratulations.
Thank you very much. We did have a very good year.
Good for you. You just heard, I assume, Mario Gabelli say he expects earnings to be higher next year, but interest rates too. There may be more volatility, but he thinks that is going to bring more opportunity. How do you see that comment, and what do you see for 2014?
Yeah, I was sort of irritated that you played him first because he said exactly what I was going to say. So we do have some wonderful tailwinds behind us here. We think 4 big tailwinds: energy, housing, auto. All 3 of those industries are going to be stronger, and they're going to put a lot of people to work at good, better paying jobs. And then the 4th tailwind is that Europe is going to go from being a headwind to a tailwind. It's coming off the bottom, and it's going to start being better. So those are the big things we got going for us. The one thing that we've got in our face, the headwind, is rising interest rates. And we think that is almost a certainty, and it is hard to predict how stocks are going to react to that. So we think Things are probably going to be going up, but it's going to be windy out there.
You didn't mention, Charlie, anything about technology, and yet the first stock on your list of picks for 2014 is IBM, and this is a stock that didn't do so well this past year.
Yeah, one of the reasons why we did have a good year this year is we try to find things that are out of favor. And right now, large cap value tech is out of favor. So IBM is one of the few stocks that didn't do very well this year. It's trading at a very low price-earnings ratio of less than 10. It's going to be benefiting from the recovery in Europe and from a strong economy. And frankly, people are just too negative right now on IBM.
Charlie, let's go to your second choice, which is Western Union. Charlie, have you heard of this thing, email, Charlie?
Yeah, try and send an email with cash across the Mexican borders. They have tightened up those restrictions, the anti-money laundering restrictions. It is a lot tougher than you think. And try sending that email if the person on the other end doesn't have a bank account. You can't do it. And so the money transfer business is growing. It's been growing steadily for hundreds of years, and we think it's going to keep growing.
You have another tech stock on your list. This is Oracle, a very controversial stock. Everybody debates about this, and the CEO, Larry Ellison. Why do you like it?
Well, again, it's because everybody hates it. You know, I don't know what this guy did, but boy, everybody hates Larry Ellison, and he's been awfully successful. His software is embedded within large companies. There are huge switching costs, and yet the stock is trading for about 11.5, 12 times earnings. That compares to an average stock of about 15 times earnings. It's going to benefit from a recovery in Europe. There's no doubt that tech spending has been soft as the economy has been a little bit soft around the world, but we think they're going to grow. And frankly, they're getting to the cloud better. They had a problem with their products not being available in the cloud, and they've figured that out.
Let's talk about a couple of things that you hate. Name a couple for 2014.
Well, I do think the bond market is still scary, and you've had me on a couple of times, and I think in the past I've said, go home, find all your bonds, and sell them. Already some of that pain's been taken, but interest rates are going to go up and bonds are going to come down. And we think municipal bonds are particularly scary. I think Puerto Rico is going to have some big trouble. It's going to come to a head this year. The state of Illinois, the city of Chicago, where I live, have still got big problems. So if we get a couple of large municipal defaults, the municipal bond market is going to be hit hard. And then we're also nervous about the high-yield market, which seems to go through 5-year swings, and it's back to being overvalued.
Charlie, great advice. Thank you very much. Appreciate it. Have a happy new year.
Thanks for having me.
Charlie Bobrinskoy of Ariel Investments.
Tonight, we kick off a series called The Difference Makers, profiling some of the most important people in business and finance over the past year and the impact that they've had. Now, in a year highlighted by activist investors, no one was more active than Carl Icahn. Wall Street's richest man took aim at several companies in 2013 and even one of his rivals. Scott Wapner has more.
From dueling with Dell,
they actually go out and they scare their own shareholders,
to agitating Apple.
It's at an absurd price relative to the market.
No investor has roared louder this year than Carl Icahn, the almost octogenarian activist arguing for change at business after business.
Well, he's certainly the most vocal. You know, he has a very big microphone, and he's taking on the world's richest and most beloved companies.
But one of Icahn's biggest battles this year wasn't with a corporate heavyweight.
You know, I really sort of had it with this guy, Ackman.
But a rival, Bill Ackman.
Ackman is a liar, okay?
The billionaires brawled live on CNBC over nutrition company Herbalife, and a decade's worth of animosity poured out. The world watched, and trading on the floor of the New York Stock Exchange virtually stopped.
I never said that I want to be friends with you, Bill. I wouldn't be friends with Carl. you. And I would. You said to me you'd like to be friends so that we could invest together.
Carl, I have no interest. Do you think I want to invest with you? Okay, let's move on.
I would invest with you if you were the last man on earth.
But one of Icahn's most memorable moments wasn't about a tiff, but a trade. The investor placed a big bet on video streaming service Netflix and hit the jackpot, an $800 million profit in just 14 months.
I wanted to sell it about 100 points ago. I really wanted to sell it. My son threatened to leave.
A big score for an investor who, even as he ages, shows no signs of slowing down.
I think that he is an extremely persistent and aggressive guy. I wouldn't necessarily want to be on the wrong side of a deal from him, but he's a super smart guy. He's got a lot to say, and I hope investors and companies are really listening.
And if they aren't yet, they probably should be. For Nightly Business Report, I'm Scott Wapner.
And join us tomorrow night for the next in our series of difference makers. We're going to profile Yahoo CEO Marissa Mayer, her impact on the company and on the business world. Tyler?
And Susie, finally tonight, the Federal Reserve hits the century mark. President Woodrow Wilson signed the law creating the nation's central bank exactly 100 years ago today in response to the banking crisis of 1907 to provide the nation with a safer and more flexible monetary and financial system. Over time, the Fed's role grew to include supervising and regulating banks, setting monetary policy, and providing financial services to the federal government, and keeping most of us, on edge every time they hold a policy meeting. So from NBR, happy anniversary to the Fed, and may you have many, many more. If this year was not the year of the Fed and the taper, it certainly was the year of the activist investor. Witness Icahn.
A fascinating story about Carl Icahn. I was going to say about the Fed, in my early years as a financial reporter, you didn't even know when the Fed was going to have a meeting. So they've come a long way to now having total transparency. We know every move they're going to make.
Yeah, and the idea of these of press conferences every so often, unheard of.
Unheard of. Well, that's Nightly Business Report for us tonight. I'm Susie Garrett. Thanks for watching.
And thanks from me as well. I'm Tyler Matheson. Have a great evening, everybody. We'll see you back here tomorrow night, Christmas Eve.
Nightly Business Report has been brought to you in part by
TheStreet.com. Up-to-the-minute stock market news and in-depth analysis. Our quant ratings service provides objective, independent ratings daily on over 4,300 stocks. Learn more at TheStreet.com/NBR.
I'm Susie Garrett with a Nightly Business Report news brief. More records on Wall Street today. The Dow set its 48th for the year, and the S&P 500, the Dow Transports, and even the Russell 2000 also closed at all-time highs. Helping push stocks up, a rise in consumer spending in November, a lift in consumer confidence in December, and a rosier outlook on the U.S. economy from the International Monetary Fund. The Dow rose 73 points, the Nasdaq jumped 44, and the S&P added 9 points. Apple shares zoomed 4% after securing a deal to sell iPhones to the hundreds of millions of customers of China Mobile, the world's biggest carrier. And the Obama administration extended today's deadline to sign up for a new health insurance plan by one more day, as it expects a rush of last-minute filers. Be sure to tune in to Nightly Business Report right here on your public television station.